So welcome to Independent Thinkers on Digital, where we crack open the hard shell of the digital world, examining its triumphs, its disappointments, and its future potential. I'm William Webb, the CTO at Access Partnership, the world's leading tech policy advisory firm. For 20 years across 6 continents, we've been helping tech companies navigate complex regulatory challenges and expand their products and services to new markets. We also work closely with governments the world over to offer advice on creating policies and regulations as the landscape continues to change with new and emerging technologies. From the promise of 5G to the challenges of privacy, from the vast potential of blockchain to the realities of emerging and existing technology, we've been there advising, guiding, and making sense of it all. On this podcast, we bring together the most incisive minds in technology, people who think for themselves and aren't afraid to voice their opinions. We're here for a real dialogue, not just some conflicting monologues. So join us as we uncover the naked truth of the digital landscape, distinguishing the emperors without clothes from the truly transformative ideas. This is Independent Thinkers on Digital. And my guest today is Maurice Patrick. Maurice is a managing director at Barclays, working in the equity research department. He's a financial analyst, has been so for 20 years, and has spent the last 14 years at Barclays. Before that, he worked at BT, where he helped to design mobile networks across BT's global asset portfolio at the time. His coverage principally is now European telecoms and towers, but he also covers African telcos and towers. Maurice, welcome. And I'm going to kick us off by looking at cost of capital. So we're hearing a lot of mobile network operators, MNOs, saying that the returns they're making are below the cost of capital. Do you agree with this? Do you think that's right? And if so, what would the implications be of making returns below the cost of capital?
Oh, thank you, William, and hi everyone from my side. Delighted to be on the podcast today. In terms of returns, most of my job is generally speaking to equity investors in European telecoms, and they do obsess around the return on capital employed that investors make with them, what the companies make with their money. And if you look at the history of European telecoms, you typically see on the fixed line side, most of the operators making reasonably good returns on capital. And that's largely because their fixed line businesses are regulated to make that return. But on the mobile side, the results do vary dramatically. You do see some companies in markets where there isn't too much competition making very healthy returns on capital employed. So, for example, in Finland, a market where you have 3 market players, everyone makes reasonable margins. You see return on capital employed around 20%, so very healthy. But in other markets where you have lots of competition, price competition, returns are lower. So you do see markets, and the UK is a good one, where you do see the return on capital employed is below the cost of capital for some of the smaller operators. So in this case, specifically Vodafone and Hutchison. Actually, the returns for BT and O2 actually aren't too bad. One of the key drivers of return on capital employed often is the spectrum. And so you have a history in the telecom sector of quite expensive spectrum auctions, which can either be made of design by the government or regulator, or a result of outsized bidding from the market participants. That can obviously drive down the returns being made and therefore the return on capital employed. So it definitely differs by market.
Interesting. So it sounds from what you're saying that it's primarily driven by the level of competition, and that impacts most on the smaller operators, which makes sense because they've got broadly the same overall capital cost of rolling out a network, but fewer subscribers to amortize that over. And I guess the obvious answer is for the smaller players to merge, to see consolidation in the marketplace. And of course, we've not seen much of that, mostly because those kind of mergers have been refused by competition authorities, mostly at a European level. But we seem to be starting to see perhaps a change in that. So here in the UK, Vodafone and Three seem to be getting their act together in terms of trying to merge. Do you think that there's likely to be a wave of mergers over the next few years, and that will naturally resolve this return on capital issue?
So I mean, back to the return on capital employed, I would definitely agree it's the smaller operators that often struggle to make the returns because of the scale argument. And we do see from the CEOs of the various companies in Europe who don't have that scale that they need to get to scale to get the return on capital employed to be at a good level. And they do talk about consolidation being one route to do that. As you say, there is a history of the European Commission blocking many mergers. Famous studies, of course, in Denmark and the UK, where the EC did actually block the mergers. And I think when the companies think about consolidation going forwards, they are very keen to understand if there's a change in the European Commission. It's looking specifically at the UK deals that will be looked at by the CMA, but I'm sure they'll take some direction from what's happening in the European Union. And you do have a consolidation event underway there now in Spain, where Orange and MásMóvil are trying to merge their operations. And most of the companies are looking very closely at that deal to see if it passes through with material remedies or not. And most of the companies indicate that if you do see a more benign approach from the competition authorities, that you could see more consolidation in other markets. I think when most of the CEOs look at historic consolidation, the result of the Italian deal, where you saw Wind and Hutchison merge their businesses, arose to a new entrant, Iliad, which has actually caused even greater competitive issues in the market, driving returns down further. So the remedies is a very important question.
So what about 5G, Maurice? You and I have talked about 5G a lot. I've been pretty sceptical about its potential to transform telcos, and indeed almost the opposite, because it requires extra expenditure from the telcos and for very little extra revenue. So if anything, it makes things worse. Do you think that has been the case, that 5G is actually a contributor to the problems that they now see? Or would that have happened anyway?
Okay. So I think when we look at 5G and more widely look at the technology migrations we've seen over the last few years, so we've seen 2G move to 3G, 3G to 4G, and more recently 4G to 5G. The extra G always comes with a promise of new services, higher speed, and greater efficiency. And so you see from an equipment vendor perspective, they're obviously very keen to push a new technology, but also from the operator side, an excitement that comes with potentially new services that can be offered. And one of the questions is always asked by analysts like myself of the CEOs of the companies running these networks is, what impact are you seeing from 5G? What revenue upside are we seeing? What costs and capital expenditure are we seeing to deliver that? But also what new services? So you do see some examples. So if I pick on a market like, for example, Finland, the companies talk very articulately about how 5G has driven ARPU increases, so spend per users going up by €2 or €3, which is 10%, so a fairly healthy number, often pitched on just higher data usage and higher speeds. You do see in other markets this sense of it's used as a mechanism to push people onto higher usage bundles or sold as a premium product. It's badged as 5G is a premium. You should pay more for it. But you do see in some of the hyper-competitive markets, it just being given away effectively at the same level as 4G, so no premium. So markets like Italy and Spain, for example, there's no 5G premium, or in fact the UK. When we do talk to the companies, I think they see B2B as a major opportunity, and they see things like, for example, private networks, smart cities and campus networks being opportunities to drive new revenue streams, although they all indicate that it's very early days in terms of seeing any impact from that. So there's definitely cautious optimism around what 5G can deliver. Capacity, yes. B2B as well. But also when the true 5G standalone comes along, there's also a hope that with the lower latency that comes from that and even higher speeds, that should unlock new ones. What I would say is most investors are quite skeptical. They prefer to wait to see the evidence of it before believing it, because of course we've seen this hype cycle come before. What did 4G really deliver other than lower latency and higher speeds, which of course is often given away and didn't result in much higher revenues for the industry.
Yeah. And it won't surprise you to know I'm in that skeptical band as well. So I'm glad to hear that investors are being somewhat skeptical. I mean, yes, there's potential from smart cities and private networks, but when I look at those, at least the potential seems to be tiny. It seems to be 1 or 2% potential revenue uplift rather than transformative and really changing things.
Yes, but if you look at the growth in traffic that you've seen over the past few years and we expect to see, I mean, you have seen over the last 10 years, every year, consumers use more data on both the fixed line networks and also the mobile network. So to give some numbers on that, on the fixed line side, you've seen consistently 20 to 30% increases in data usage per household, often driven by increases in streaming. And on the mobile side, you have seen 30 to 50% increases every year in data consumption. And so there is always that hope that that you can get consumers to pay more for the higher amounts of data that they're using. The problem, of course, is if we look back, is even though that data growth has been there consistently, the ability to monetize it's been relatively limited, other than in some of the markets where you have clear evidence of pricing power, like some of the Nordic markets, for example, where there's a successful upsell based upon that speed and based upon that usage.
And back to your point about competitiveness, as I think you said, it's in a really competitive market, it's harder to charge more for those bigger bundles because competition essentially just pushes them back down again. Effectively, the gains that 5G does give you in terms of lower cost per bit, which allows you to have bigger bundles, end up just being gains that the consumer gets in terms of a bigger bundle for the same amount of money, rather than the industry itself gaining those.
Yeah, one of the interesting questions has always been whether or not the new technology can bring a differentiation or a difference in terms of the quality of networks. And maybe the larger scale providers can invest more in a technology and drive a differentiation or have enough money to spend on a new service which differentiates them from the smaller players. I mean, the evidence of that's been quite limited. And I think that's been one of the frustrations looking at the sector for so long is the smaller operators are able to compete based upon often just upon price, and the difference in network quality just isn't so large as to make that difference stick.
I think that's right, and I think it is hard to differentiate when there's only 2 or 3 suppliers of equipment in the market to choose from, and you've got to stick to the standards. So it means that it's much harder to do things differently. And I guess where we have seen differentiation, it's been the kind of fluff around the edges, free cinema tickets or things like that, rather than anything material. What about 6G? Do you see that being talked about? And what's the sort of general attitude towards that?
Yes, I think from whilst we're on the Gs, I mean, I think most investors and most of the companies are very fully focused on at the moment getting the return profile right from the 5G networks before even thinking about what happens on 6G. And I suppose if you think about the way in which this sort of tends to move, I mean, you see the standards bodies moving on new technology many years before it ends up being in commercial deployment. So I think from an investment perspective, the focus is very much today on what's 5G, what's 5G standalone. Can that drive upside? Can you see these new business models we spoke about before? I mean, whether it's smart cities or campus networks, can that drive opportunities? And I think once we have the answer to that, then the question, of course, will be, what's 6G and what would that bring? So I think it's definitely too early, I think, from an investor perspective to get excited about what 6G can mean.
Are investors worried about it? Are they worried that mobile operators will throw lots of money at it for no significant return, and that will push down even further the rates of returns that they're getting?
Well, I think what's interesting on the investment side is if you look at the investments in capital expenditure across Europe over the last, 10, 15 years or so, you have seen steady increases. And so whereas the aggregate spend on capital as a proportion of revenues 10 years ago was 13 or 14%, so 13 or 14% of revenue spent on CapEx, that number is now 18 to 19%, so much higher. But almost all that increase has been driven by increase in fixed line networks and more specifically fiber to the home. So actually the spend on wireless CapEx has been broadly unchanged over the past decade or so. So despite the introduction of new technologies, you haven't really seen that spike. there's been a couple of companies that have talked about modest increases in 2022 and 23 and maybe even 24 for the pushing and development of more 5G networks, for driving it deeper as the coverage increases. But you don't really have that step up in CapEx. And I think when people think about technology advances and new technology introduction, that question around is it a significant step up in investment required? And I think when you look at the existing business models that are there, it doesn't feel as though you're going to have any dramatic step up in CapEx. People talk a lot about edge data centers and whether or not that changes the the envelope of CapEx or where lots of the densification has to happen. But I think that's still very much an open question. So most investors assume wireless CapEx probably trends broadly stable over the next few years.
Yeah, and I can understand why the operators can't really push up CapEx because that pushes down profitability, and already that's problematic. Do you think there's a scenario where they could actually reduce CapEx and start saying, well, we need to invest less in the network now, it's stable?
One of the investor frustrations for investors into European telecoms is that CapEx keeps going up. And so you always seem to have this CapEx creep as such, which impacts your free cash flow. And when you have investors who want to see a return on capital employed, that reduction in returns is seen negatively. And so you have seen a couple of companies signal the potential reduction in CapEx. So Orange has talked about it in France as they finish their fiber to the home rollout, and Telia also in Sweden. So you are starting to see some of the CapEx fall, but that's typically because large projects, specifically fiber to the home, have been essentially completed. I think when you look at some of the CapEx levers for the industry, we definitely find capacity remains a constant focus for the company. The need to invest more in driving ever higher levels of traffic. That's consistent, and that probably continues to be the case. I sense that telcos would like to invest more in some areas, like, for example, developing their core networks and IT competence more. But for sure, there's at some point a potential to reduce capital expenditure. I'm probably thinking more now on the radio side once the 5G coverage has completed. But I just note that you are seeing a shifting of CapEx a little bit away from the radio, maybe towards the core network, which probably isn't going to fall anytime soon.
And we've talked a bit in the past about whether mobile data growth is now slowing, and the data does seem to suggest that it's dropped from its 50% a year that we saw consistently 3 or 4 years ago to maybe half that on average in most markets, although not all. What's the industry take on that? Do people notice that? Do they extrapolate that further downwards, or do they look at it and say, actually, this is a change in patterns, or is the expectation it will just go back up again at some point?
Yeah, I think as long as the growth in traffic remains in that sort of 20 to 50% corridor, I think most investors will buy into the fact that number one, there's always a potential to grow the revenue side of this and pricing power, but also number two, it's unlikely that the capex is likely to explode to deal with that traffic. And of course, you'll see that debate currently aware on fair share with the European Union, yes, looking at whether or not there is a need for other players to contribute towards that cost of capacity if in fact it does change. But in the scenario you point to, which is a potential slowing in traffic, which I'm not sure we really see it happening anytime soon. If the burden of capacity on the networks decreases, whether that maybe eases some of the capex budgets, will be an interesting thing to watch. Certainly, when I speak to the companies I cover in the European telecoms, there's no expectation really of a significant fall in the growth in traffic going forwards. But I take your point. If you do look at that growth in mobile traffic specifically, it was 40 to 50% sustainably over many years, and that has fallen in the last couple of years towards 20%. There was obviously a little bit of impact from COVID-19. In some cases, a bit of pull forward of capacity. In other cases, maybe pushing backwards a little bit. It's definitely an area we're focused on, which is if we are about to see an inflection point in that growth. The companies, of course, will all point to the fact there's a law of large numbers, which is compounding 40, 50% does result in a very large overall number, and actually 20% growth this year versus 50% 5 years ago actually isn't that different when it comes to absolute magnitude of increase. But no, it's a very important point, and something I think people are very focused on.
And you mentioned the fair share debate, which I've been following closely too. What's your take on that? So for people who aren't familiar, the argument basically is that that mobile operators aren't making sufficient returns, and fixed operators to some degree, but the over-the-top providers that generate large amounts of data, Netflix, Google, Amazon, Meta, and others, the argument says are making lots of money, and therefore there should be some rebalancing, and they should pay some amount of money to the operators in order to compensate them for the loading that they are apparently putting on their network. So, and there's sort of two quite strong camps for and against that, as you could imagine, at the moment. Where do you think the industry sits on that?
So you see, very clearly the telecom companies, unsurprising, making a cogent argument that 60% of their traffic is being made up by just 5 or 6 global technology companies, and they don't really contribute towards their network. So maybe they should. And it's interesting to see from a European Union policy perspective. You've seen initial broad support from commissioners such as Thierry Breton and Margaret Vestager, who brought it up, consistently over the past 12 months in terms of bringing that in with a consultation, as you know, underway. What I find very interesting is when you speak to European politicians around, their sort of need for connectivity, and they have an overall a desire to see fiber connectivity and 5G connectivity everywhere. Now, of course, when they ask the telecom companies, please, can you roll that out everywhere? The pushback is, well, I don't make enough return on capital employed. So you can see from a policy perspective, getting help from some form to pay for those networks makes a lot of sense. To get that extra capacity and extra coverage, extra fiber, extra 5G, that contribution comes from others. But you can obviously see the strong opposition from the other top providers. Say, well, look, it's the customers who want it. Surely it's down to the telecom company to charge his or her customers for that usage, rather than embracing a two-sided model. So I'm sure this debate will continue, and the volume will increase in the next 2 years on it.
And is it material to things like share price of the operators? So are we talking about enough money that actually it would significantly change the profitability of those companies and therefore impact their share price?
Yeah, so the European telecom sector delivers around 30 billion euros of free cash flow every year, which sounds like a very large number, but given the capital that's been deployed to produce that, it kind of goes back to our points around returns on capital employed and not being where they should be in some areas such as mobile. But we wrote a report which looked at a sort of 3-4 billion euro number, so it's quite material in terms of the potential contribution towards cash flow. Of course, the interesting question is, would any cash flow that's been provided be reinvested into new capacity, which itself, of course, could drive higher upside. So it's definitely a potentially material number. I've seen reports from various consultancy companies pointing to higher numbers, but 3 or 4 billion was the number we came up with.
And I guess it's a good point. If that money comes with strings attached, such as it must be used for investment that you wouldn't have otherwise made, then in principle it doesn't change the overall dial on the profitability very much. And if it did, then there's always a risk that actually it just gets competed away like any other kind of improvement in the networks.
I guess you have. If you think about the fixed line side, as I think we indicated earlier, the returns on capital are actually pretty healthy on the fixed line side. And my understanding is a lot of this investment is due to go into more rural areas where the economics of rolling out fibre to the home aren't as solid as they are in the more urban areas. There are government subsidies available for driving that rural coverage. So I guess if it's an enabler of accelerating that, it could be a positive.
So one scenario that I've been pondering, and I don't know how likely it is, but I can imagine it happening, is in order to forestall these arguments, some of these over-the-top players could in principle reduce the amount of traffic that is flowing from their networks through video compression, through not having videos auto-run when they're in your feed, and all sorts of other things that they could in principle do that would actually help dramatically, stopping big downloads from happening unless you're on Wi-Fi, all those other kinds of things. And if they did that, that actually could contribute to a significant drop in mobile traffic volumes because they generate about 40, 50% of the traffic. So if they manage to knock 10 or 20% off of their data volume, we could get to a world where traffic growth stopped at least for 1 or 2 years. So I could actually see that leading to a significant fall in the mobile traffic growth, which then leads to less need for investment, potentially, depending on whether you see that as a one-off or a longer term thing.
The telecom operators, which is, we don't control this traffic. And in some cases, does the consumer actually ask for it? Do you ask to see that the advanced picture sort of being pushed down to your device? And they'd like some more control around it. And currently, with the way in which net neutrality regulation works, they can't. So it's is there in some way to equalise that relationship, which I think is also at the heart of it.
One other area that we haven't touched upon, and again, you and I have talked in the past, is fixed wireless access. So I've been long of the view that you can do fixed wireless access at the start of 5G because you've got lots of spare capacity on your network, and you can effectively soak some of that capacity up by giving it to homeowners. But the problem is that they consume at least 10, often 20 times more data than a mobile user. And yet the revenue you get from them is typically about the same as a mobile user. And so if you have too many of those on your network, you very quickly run out of the ability to have more mobile users, and then your revenues drop. But so far, at least particularly in the States, they've been very positive about fixed wireless access and continuing to grow it aggressively without any really clear capacity issues. Did I get that wrong, do you think? Or do you think it's still that scenario is going to unfold, but just hasn't happened yet?
Look, I think on the fixed wireless access side, you can see the appetite from the wireless players to push the product. You've got a large spectrum bank that you've paid a lot of money for, and you have a nationwide network, which presumably some parts are still highly utilized, but other parts are not. So if you go into the more rural parts of the country, you probably have a lot of spectrum not being utilized. So spectrum you pay for not being utilized. So you can see the temptation to think, well, that's it's a huge amount of spectrum there, latent capacity I could use incrementally, effectively for free, because the spectrum's been paid for. The extra cost of that data is very, very low on a relative basis. So you can see the economics of pushing fixed wireless access. I think your point is the important one, which is at what point do you run out of capacity, and can you manage that? So I think what certainly the feedback I get from many of the companies I speak to is, they're very, very happy to push the fixed wireless access product, certainly so in the more rural areas, and they're all thinking very carefully about, is there at some point where they risk hitting a peak and not wanting to hit that peak and realize it too late, and be able to manage that. Now, whether that's understanding the dynamic growth of your network and being able to work closely with your retail distribution, whether it's identifying customers who take a fixed wireless access product and then plug in multiple devices to it and therefore create a lot of congestion, and managing those customers, I think we're very much at the early stages. But as you say, in the US market, most of the broadband additions that have been added on broadband over the last few quarters have been going on fixed wireless access. We don't know, of course, where those are. And I speak to European companies who say the same thing, which is in the rural areas, especially where they're pushing it, they see significant traction, often as part of turning off the copper network. So in some of the Nordic markets, you see the incumbents pushing fixed wireless access rather than having to deliver the service, a fiber service. So I think we'll see it move on. One of the interesting insights I hear a lot from the integrated telcos, and they would say this, of course, is they don't believe that fixed wireless access will ever be a replacement for fiber to the home. The point being is, can fixed wireless access give you a credible service at 50, 100, 200 megabits per second? Probably yes. Can it compete with a gigabit fiber? Question. So I think that's probably one of the big debates we'll have over the next 5 years, is whether fixed wireless access is effectively a substitute for copper, or whether it actually can take on fiber. I've heard both views, of course. The 5G only operators will say that it can, and the integrated guys typically indicate it probably won't.
We've talked a lot about the downsides and potentially the upsides for operators if there are new applications, if they can get into IoT or smart cities or other kind of growth areas. At the moment, the news seems to be predominantly negative, at least in terms of things like job cuts. We see almost weekly announcements of fairly large numbers of job cuts across both mobile and fixed operators, and a sort of suggestion that they're contracting, if anything, rather than expanding. Do you think that's where we're heading for the next 5 years that it's a world of consolidation, contraction, sort of retrenching, or would you actually sort of put your money on something happening that's going to stimulate a return to sort of the fantastic years of the late 90s when things were growing brilliantly and everyone was plowing money into particularly into mobile?
Look, I think most of the companies are actually reasonably optimistic as they look forwards, and there's a number of reasons to be optimistic. I mean, you've seen for the first time in quite some time an over move to try and put price up. So you are seeing upwards pricing moves in fixed and mobile. Mm. And I think part of that was a reaction to the increasing cost of inflation forced them to, but actually making them think about putting up price and trying to restore some pricing power rather than just rely on cost cutting to meet and deliver on the free cash flow and therefore the returns on capital from a near-term perspective. But I think when the companies look ahead, they see that. They do see an improving regulatory climate. We haven't spoken too much about regulation on this call, but you are generally seeing a move towards deregulation, where you're seeing fixed line products being deregulated from a price perspective, but also less over regulation on the mobile side as well. And policymakers, as we spoke about with the fair share debate, trying to help, in terms of getting the returns to make that investment work in the rural side. So I think you got regulation improving. You got potentially improvement in pricing. You do have this consolidation story, which remains there with the smaller companies trying to consolidate, and that remains very much an open question. Everyone looking to what happens in Spain with the massive Orange deal, if that changes that paradigm around consolidation. But there is a hope for new areas. One thing we haven't discussed, which is there clearly is a large consumer surplus on our telecoms. The value we get from a fixed line broadband connection is much higher than what we pay for it in most cases, I would argue. And so therefore there's a hope, which is the consumers want the product. There's demand for the product. Every year people consume more of it. What we need to see is an improving pricing environment such that returns can go up to help stimulate some of that extra capex that I think could be used and would be used to drive future growth. And that's I think that's reason to be reasonably optimistic.
Sounds good. And I absolutely agree with consumer surplus. And I think it's less than £10 a month for my mobile. And I look at it and think, what I get for that £10 is fantastic. I would pay £100 if I had to for that kind of capability, because I wouldn't want to be without it. And I think your point is well made that nobody's going to be dropping their home broadband and their mobile usage really, or not in any significant volumes anytime soon. So the revenue flow is assured to the operators. I think it's an interesting point as well that maybe inflation has helped them because it's given them an excuse to put up prices, and then within that they can effectively push prices a bit higher than the inflationary element and actually gain some growth there. And I think you're right that it feels like the talk around mergers has changed significantly over the last 5 years or so. So I am fairly optimistic that some of these mergers will be allowed, and that will change the dynamics. And to your original point, make the markets less competitive and then allow better returns. So yes, I think I buy into being somewhat more optimistic going forwards. And that I think is pretty much all we've got time for, Maurice. I don't know if you want to come back with any last comments on that or any last few words.
It's been great. It's been a great conversation and covered a lot of ground. I'm very happy to be on your podcast.
Maurice, it's been wonderful to have you on the podcast. Thank you so much for joining us. Thank you to everyone for listening. And to all those listening, you can see some links below as to other resources and other podcasts that you can access. Goodbye.